Okay, so when talk of assurance and an assurance engagement, this is categorized into two. Assurance engagement, this is categorized into two. Number one, we have assurance engagement. We have assurance engagement. And number two, we have non-assurance engagement. So assurance engagement, this is categorized into two. Number one, we have assurance engagement, and number two, we have non-assurance engagement. Now, when we talk of assurance engagement, this refers to the process of examination of books of account in assurance engagement. It is the process of examination of books of account with intention of trying to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited assurance. So when you talk of assurance engagement, we are saying this is the process of examination of books of account with the intention trying to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited form of assurance. Meaning, when you're doing your assurance engagement, basically you want to confirm whether these books of accounts or financial statement, do they conform to a certain criteria? Meaning, assurance engagement, it is a process through which you want to confirm whether these books of account conforms to a certain criteria in order to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited assurance. Now, before I get deeper into this, allow me to introduce elements of assurance engagement. Elements of assurance engagement. Element of assurance engagement. Now, we have 5 elements of assurance engagement. We have 5 elements of assurance engagement. Of course, I'll give you an acronym to help you to remember. That is CASNEB. We have 5 elements of assurance engagement. That is now CASNEB, whereby this one stands for criteria. We have reports. We have evidence. We have subject matter. And of course, we have 3 party relationship, which entails the responsible party. We have the practitioner, and of course, we have the intended user or the end user. Now, meaning we have said, when we talk of assurance engagement, this refers to the process of examination of books of account with the intention trying to confirm whether these books of account conforms to a certain criteria in order to increase the degree of confidence of the intended users of these books of account by giving either reasonable assurance or limited form of assurance. Then now the question is then, what is criteria? Now when we talk of criteria, this refers to the benchmarks, that we expect the financial statement should conform to them. Meaning a criteria, this refers to a benchmark or maybe the standards. Meaning it is your business in the long term to confirm whether these people, when they are prepared the financial statement, that is the management, whether they prepare these books of account according to a certain criteria. Meaning all the books of account, all the internal control system, they are supposed to conform to a certain criteria. Meaning a criteria, this can be accounting standard, meaning I expect when someone is preparing the financial statement, they should conform to IFRS. We expect this person should ensure that these books of account conform to IAS, that is International Accounting Standards, ISAE, that is International Standard of Assurance Engagement, GAPS, that is Generally Accepted Accounting Principles, or maybe concepts. Meaning, when the management, they are preparing the books of account, they are supposed to ensure that they meet a certain criteria, so that when you are coming into audit, you be an auditor, your business, when you are doing an assurance engagement, you'll be interested to confirm whether these books of account or the financial statement, they conform to that criteria that we expect they're supposed to conform to. Meaning it is your business as an auditor. When you're doing an assurance engagement, and I think I need to bring this on board at this point, when we talk of assurance, assurance precedes audit. Meaning, once the books of account has been audited, somebody can go ahead and do an assurance engagement. Meaning, when you're doing an assurance engagement, this is whereby you are trying to affirm, you are trying to confirm whether the information that has been provided in form of financial statement by the management, they reflect true and fair. Meaning, when I'm doing an assurance engagement as an auditor, basically I want to confirm this financial statement or the books of account, do they conform to that criteria? Then number two, of course, under elements of assurance engagement, we have report. When we talk of report, this refers to the ultimate product that an auditor gives after he has gathered sufficient appropriate evidence. Meaning a report, this is a summary of all the information, the findings that the auditor has gathered in respect to the financial statement or the books of account that he is auditing. Meaning, once he has gathered this evidence, he is supposed to give this evidence in form of a report. And that's what we are calling elements of assurance engagement. The number three, of course, we have evidence. Now, when we talk of evidence, this refers to the outcome, information, evidence. This refers to the outcome information that the auditor gets after he has examined these books of account. Now, every time you are auditing as an auditor, you're supposed to ensure you have sufficient, appropriate evidence. Meaning, as an auditor, you're supposed to ensure that you have sufficient appropriate evidence. Now, sufficiency, this is all about the quantity of information. Appropriateness is all about the quality of information. Meaning, many occasions, of course, someone will be talking of sufficient appropriate evidence. Meaning, sufficient appropriate evidence, this refers to the two qualities of good evidence. So at this point, Vincent, you need to know this. If someone asks you about the quality or the characteristics of good evidence, we have two characteristics of good evidence. Number one, evidence must be sufficient, meaning sufficient is all about the quantity, and evidence must be appropriate. Appropriate is all about the quality. Of course, we'll discuss this in our topic 6, meaning it's my responsibility as an auditor to ensure that I gather sufficient, appropriate evidence for the purpose of forming an opinion. Now, where am I getting this information from? I'm getting this information from a subject matter. So the question is then, what is a subject matter? Now, subject matter, this refers to the phenomenon. This refers to the phenomenon or the item that is being audited. Meaning, when you're auditing an organization, you can be auditing the financial statement, stock books of accounts. You can be auditing the internal control system of this organization, that is the ICS of this organization, or probably you can be auditing the processes of the organization. I hope Vincent, you're following. Meaning, when we talk of subject matter, this can be the financial statements or the books of account. This can be internal control system of the organization, or this can be the processes within that organization. It is my business as an auditor, when I'm evaluating the books of account or the financial statement, it's my business to confirm an assertion, to confirm the assertions. I think you need to know somewhere, not somewhere, Vincent, not somewhere, assertion, assertion, not somewhere, assertion, put an event. This refers to a statement. This refers to a statement. Assertion, this refers to a statement or a representation made by the management, when deciding to include or to exclude, an item in the financial statement. I repeat, an assertion. This refers to a statement or a representation made by the management when deciding to include or to exclude an item in the financial statement. Meaning, when you are doing your audit assignment and you are evaluating these books of account or the financial statement, you want to confirm the assertions. We have 3 categories of financial statement assertion. Again, I think you need to note somewhere. Categories of financial statement assertions. Categories of financial statement assertion. Number 1, assertion about account balances. Number 1, assertion about account balances. Number 1, assertion about account balances. Number 2, assertions about classes of transaction. Assertions about classes of transaction. And number 3, assertions on presentation and disclosure. Assertion on presentation and disclosure. So when someone talks about assertion, we are saying this refers to a statement or a representation made by the management when deciding to include or to exclude an item in the financial statement. So it's my business as an accountant, when I'm preparing the balance sheets, I have to confirm the disclosures that I'm disclosing there as assets. Do they exist? Because now that should be confirmed. Meaning existence is an assertion under balance sheet, that is account balances. Number 2, I have to confirm right and obligation. Meaning I want to confirm we have the right over those assets, or if we have a liability, do we have an obligation to pay? Then number 3, of course, I need to confirm valuation and accuracy. When somebody is disclosing item the balance sheet, they must confirm that they have disclosed the correct carrying amount. Meaning there is that cost of those assets. We have the accumulated depreciation and the net book value, if at all the business is a going concern. Meaning, when you are coming into audit, you being an auditor and you are auditing the balance sheet, then you are interested to confirm those 4 assertions. That is, existence of those assets, the valuation and accuracy. You want to confirm completeness, and of course, you need to confirm rights and obligation. So when you are auditing the financial statement here, that's what exactly you want to confirm. Now, if you're working on the income statement, then it means you are interested on assertions about classes of transaction. Meaning any disclosure in the income statement, you have to confirm they have disclosed sales. Can they actually confirm whether those sales actually took place? Meaning if I take January JVs, Feb, March, all through up to December, I should be able to confirm that the sales that they have captured in the income statement actually took place. Meaning, as an auditor, when you're working on that, then you are interested to confirm assertion about classes of transaction. It is also important for you to confirm completeness, whether any transaction that should have been captured within that accounting period has been captured. Meaning, it's my business to confirm this transaction that we should have we captured all the transactions? We also need to confirm part of stock measurement, meaning, are we considering the relevant period and review? Meaning, if I'm auditing financial year 2016, 2017, or maybe I'm auditing financial year 2022, 2023, I want to ensure that all the transactions that should have been captured within that period, actually, they have been captured. Meaning, I'm interested on assertions about classes transaction that is cut off. Then finally, of course, I'm interested on classification. Meaning, in the summary, when I'm working on the financial statement, I'm interested to confirm the disclosures in the balance sheet, the disclosures in the income statement, and whether they have been disclosed fairly. Meaning, when we are talking of a subject matter, we have said subject matter, this refers to the phenomenon or the item that is being audited. Meaning, if we are auditing the financial statement, are we interested on those assertions there? Number two, of course, in an organization, as part of your subject matter, you could be evaluating the internal control system of this organization. Now, internal control system, this refers to financial and non-financial controls within an organization. Meaning, under the books of account, and actually before you start working on the books of account, it is prudent of you to work on the internal control system to confirm well, this internal control system, are they strong, or maybe is there a possibility that they are weak? Number two, it is also your business as an auditor to confirm whether this internal control system, are they effective? Are they effective and efficient enough? Meaning, all the internal control system, they're supposed to be effective. They're supposed to be efficient. So it's my business to confirm efficiency and the effectiveness of this internal control system. Now, you being an auditor, when you evaluate the internal control system, means I have to confirm whether are they weak or are they strong. I also need to confirm efficiency and effectiveness of this internal control system. Meaning, when I'm working on the internal control system, then again, I can conclude that I'm working on the subject matter. Then finally, of course, you can be working on the processes within an organization, how things are being done within that organization. I could be interested on the capacity of a facility. I'm interested on that process. Meaning, the element of assurance engagement, other than issues of criteria, report, and evidence, we have the subject matter, whereby we have said subject matter, this refers to the phenomenon that you are auditing within the organization. Whereby we have said we can be auditing the financial statement or the books of account, we can be auditing the internal control system of the organization, or we can be working on the processes of that organization. Then finally, of course, we have three-party relationship as part of our elements of assurance engagement. And a three-party relationship, we are saying we have responsible party. And a three-party relationship, number one, we have responsible party. Now, responsible party, this refers to the management. Management being the person who has the responsibility of preparing a financial statement that reflects true and fair view. Meaning we say a responsible party is that person who is responsible of the assertion that we are discussing there above. Number two, we have a practitioner. Now, practitioner, this refers to the professional. Meaning, professional here we are referring to you being the auditor. You are part of the three-party relationship, that is the practitioner. Then finally, of course, we have the intended users or the end users of the financial statement. When I'm working on this financial statement, where am I working with them? Who is it going to benefit out of this slide? Meaning end user, this refers to any person who has interest on the audited financial statement. This can be the government, this can be the employees, this maybe can be investors, this can be maybe the shareholders, etc., etc., etc. All those people at the end of the intended users. So with that understanding then, at least we are able to tell what are the elements of assurance engagement. And of course, we have said we have 5 elements of assurance engagement. I don't know whether Fitz said you can remember them. Elements of assurance engagement.
Yes, I can.
Talk to me, bro. Elements of assurance engagement. Of course, I've given you an acronym that is KASNEB. Yes, give me 5 elements of assurance engagement. Number 1.
We have the criteria.
Yes, we have the criteria, whereby we have said criteria, this refers the phenomenon or the item that is being audited. Number 2.
We have the report.
We have the report, whereby we have said the report, this refers to the ultimate product that you get after you have gathered sufficient appropriate evidence, meaning all the information that you get, this information should be put together in an auditor's report. Next.
Subject matter.
Subject matter, yes, whereby we have said subject matter, this refers to the phenomenon. This refers to the phenomenon or the item that you are auditing. We have said subject matter can be the financial statement, can be the books of account, can be the internal control system, can be the processes within an organization. Next, we have what?
We have evidence.
Evidence, whereby we have said evidence, this refers to the outcome information that we get after we have gathered sufficient appropriate evidence. That outcome is now what we call an evidence. And you have said evidence must be sufficient and appropriate, whereby I've told you sufficiency is so about the quality, meaning enough. Do I have enough information in terms of quality? Then appropriateness, we have said this so about the quality, meaning you are interested on the relevance and the reliability of the source. Of course, I want to leave that at that point, because of course, in our topic 6, we'll be working on more on that evidence. Then from there, we have what?
We have the three-party relationship.
The three-party relationship, whereby under three-party relationship, we have said we have the responsible party, whereby we have said the responsible party, this refers to the management. Then number 2, we have said we have the practitioner, whereby we have said the practitioner is who? The professional, that is now the auditor. Then number 3, of course, we have said we have the intended user, whereby we have said the intended user, this refers to any person who has interest on the audited financial statement. Now, I want you to follow. We have said assurance engagement, this refers to the process of examination of the books of account of the financial statement with intention to try to confirm whether this books of account conforms to a certain criteria in order to increase the degree of confidence of the intended users of this books of account by giving either reasonable assurance or limited assurance. Now, listen to that definition. We have said the process of examination of books of account, meaning when we talk of examination of books of account, this is a bit narrow, meaning we can say it is a process of examination of the subject matter, meaning assurance engagement. It is a process of examination of the subject matter in order to confirm whether this subject matter conforms to a certain criteria in order to increase the degree of confidence of the intended users of this subject matter, in order to increase the degree of confidence of the intended users of this subject matter by giving either reasonable assurance or limited assurance. So in summary, Vincent, mtu akikuuliza, what is the objective of assurance engagement? We have 2 objectives of assurance engagement. Number 1, to express a reasonable assurance or to express a limited form of assurance. I think with that understanding, then I think we can get deeper into this. So when you are doing an assurance engagement, your business, you want to express either reasonable assurance or limited form of assurance. Now, What's the difference between the two? When you talk of reasonable assurance, this refers to a positive form of assurance or a high level form of assurance. Now, when we talk of limited form of assurance, this refers to a negative form of assurance or a low level form of assurance. Notice what I think said, that there's difference between reasonable assurance and limited assurance. Wherever we have said reasonable assurance, it is a positive form of assurance or a high level form of assurance. Limited assurance, this is a negative form of assurance or a low level form of assurance. Now, we give reasonable form of assurance after we have audited historical financial information. We give limited assurance after we have audited prospective financial information. Meaning, we can say reasonable assurance, this is a positive form of assurance or a high level form of assurance that an auditor expresses after he has audited historical financial information. I hope you have noted that keenly. With reasonable assurance, this is a positive form of assurance that an auditor expresses. It is a positive form of assurance or a high level form of assurance that an auditor expresses after he has audited historical financial information. Then number two, limited assurance. This is a negative form of assurance or a low level form of assurance that an auditor expresses after he has audited prospective financial information. Now, for better understanding, let's have this demonstration. Assuming, Vincent, you are auditing financial year 2019, 2020, or maybe 2020, 2021, or maybe 2021, 2022, you will tell people that you are auditing an historical financial information. Meaning, historical financial information, this refers to any information that is available in the public domain. Historical financial information, this refers to any information that is available in the public domain. Now, when you talk of PF5, assuming you are auditing financial year 2023, 2024, or maybe 2024, 2025, or maybe 2025, 2026. You will conclude that you are working on prospective financial information. Meaning a PF5, this refers to any information, a PF5, this refers to any information of activities that have not taken place, but they will take place in future. Now, assuming 2019, 2018, our profit was maybe 6 million. 2020, 2021, the profit was 8 million. 2021, 2022, the profit is 10 million. Then with that understanding, you can tell what would be the profit for 2023, 2024. Meaning, from what we can confirm, there is a pattern on how the profit margin has been changing. From 2019 to 2020, this is a margin of 2 million. 2020, 2021, 2022 is a margin of another 2 million. So we can conclude 2023, 2024, our profit will be 12 million. 2024, 2025, our profit will be 14 million. 2025, 2026, our profit will be 16 million. Meaning, from the pattern that we have noted, our profit has been grown by a margin of 2 million from 6 to 8, 8 to 10. So our assumption is the profit for 2023-2024 will be 12 million, 2024-2025 will be 14 million, 2025-2026 will be 16 million. Meaning, with this understanding, then you can say a PF5, this refers to any information that is based on assumption of activities that has not taken place but will take place in future. Meaning, a PF5, this refers to any information of activities that has not taken place, but we are assuming those activities will take place in future. Meaning, if somebody gives me a forecast or someone gives me a projection, or maybe someone gives me a budget, then you can conclude that all these activities, they have not taken place, but we assume they will take place in future. Meaning, if you are only a forecast, you are only a projection, or you are only a budget, then you know that you are dealing with the information of activities that have not taken place, but they will take place in future. We are assuming they will take place in future. So if you are only such activity, then we are saying you can only give a limited or a negative form of assurance. You can give a limited or a negative form of assurance. Are we together up to that point, Mr. Vincent?
Yes, my name.
So are you able to tell at what point will you give a limited form of assurance and at what point will you give a reasonable form of assurance?
Yes, I know the difference.
Good. Meaning we have agreed we give a reasonable form of assurance or a high level form of assurance after we have audited historical financial information. That is any information that is available in the public domain. Now, we give a limited form of assurance or a negative form of assurance after we have audited a PF5. That is prospective financial information. That is any information that is based on assumption. Are we together up to that point?
Yes, my name.
3 issues that I expect now you understand. Number 1, you understand what is assurance engagement. Now you understand the objective of assurance engagement, whereby we have said the objective is to express either reasonable form of assurance or a limited form of assurance. Number 3, I also expect now you know elements of assurance engagement, whereby we have said we have 5 elements of assurance engagement. Now, take 1 means just confirm if there's anything that you have noted, just check whether you have written it correctly. Maybe you have a question that you want to ask, you do so before I go to something else. Now, so far, at least now we know we have 2 types of assurances that we can give. Number 1, we can give a reasonable form of assurance, and number 2, you can give a limited form of assurance. Of course, we have another assurance that I want to bring on board. You have said we have limited assurance, which is a negative form of assurance or a low level form of assurance. Then number 2, we have said we have a reasonable. You have reasonable assurance. which again is a positive form of assurance. Of course, we have another assurance that we have not discussed of, that is absolute. Absolute assurance. Now, when you talk of absolute assurance, this refers to a 100% form of assurance that you can give. When you talk of absolute assurance, this refers to 100% form of assurance. Now, listen what I've been said. As an auditor, you don't give absolute assurance. You can't give 100% form of assurance. You can't tell people that everything is correct. Meaning, when we talk about absolute assurance, this refers to 100% form of assurance. 100% form of assurance. Now, as an auditor, you give reasonable assurance or a limited form of assurance in order to reduce the engagement risk. I repeat, you give reasonable assurance or limited assurance in order to reduce engagement risk. Now, engagement risk, this refers to the possibility or the susceptibility that an auditor is like to express inappropriate assurance. Meaning, it is possible that you can tell people that everything is perfect, everything is fine, when actual says that is not the case. Meaning, as an auditor, you can give reasonable assurance or you can give limited form of assurance in order to reduce your engagement risk. Of course, in examination scenarios, I will ask you reasons why auditors do not give absolute assurance. This is a question that you'll always get in exams. Reasons why auditors do not give absolute assurance, that is 100% form of assurance. Remember, we have said absolute assurance, this refers to 100% form of assurance. You as an auditor, you can't give 100% form of assurance. Reason would be number one, because of selective testing. Meaning, in most cases, when you are doing your audit work, you are doing sampling. Meaning, you are picking few items out of your total population and generalize the characteristic behavior of what you have collected to be a representative of the total population. Meaning, as an auditor, out of a given population, like now, assuming this is my population. These are my invoices. I have invoice 1, 2, 3, 4, 5, 6, 7, 8, and 9. These are my invoices. Out of my total population, from my sample size, I've got 9 invoices. Now I can decide to pick note 1, I pick note 5, and of course I pick note 9. So the characteristic behavior that I'm going to get from the 3 invoices, I'm going to generalize to be a representative of the total population. But it's possible that out of the characteristic behavior, some of the invoices that you have picked here might have different features from what you have not picked. But now the assumption you assume that the characteristic behavior that you have drawn from note 1, 5, and 9 represent the total invoices that you have here. But natural sense, remember, what you have done selective testing, meaning you have picked few items on the total population and assume that everything is perfect. And because of that, you can't give 100% form of assurance because you have not counted everything. You have not evaluated everything. You have just evaluated 3 invoices out of the 9 invoices there. And because of that, you can only give a reasonable assurance in order to reduce your engagement risk. Number 2, inherent limitation of without control system. Inherent limitation of ICS. Number 2, inherent limitations of ICS. Meaning, yes, in every organization, we can have the internal control system. Internal control system, this refers to financial order and financial controls within an organization. We can have internal control system in place, yes, but this internal control system could be weak. Meaning, if they are weak, then there's possibility that they might not prevent and detect errors and fraud on a timely basis. Now, we say at the inherent limitation of the control system, again, the internal control system could be there, but somebody can bypass those controls. That is inherent limitation of ICS. The internal control system could be there, yes. There could be control activities, there could be segregation duties, but somebody can decide to collude with a third party or maybe with another colleague to bypass the control, or maybe to mislead a financial statement to defraud the organization. Meaning, the internal control system could be there, yes, but people can collude. That is another inherent limitation of the internal control system. We can add internal control system, yes, but now some of the areas that we're working on, they are a bit technical for the internal control system. Or maybe if the internal control system could be there, they are all there for those specific areas that we have been trading in. Meaning, if there's one area that we have not been used before, we might not have developed internal control system over the time. And because of that, we can't give 100% form of assurance that everything is perfect within that organization. Now, number 3, we have some of the evidence gathered is persuasive rather than conclusive. Meaning, some of the evidence that you gather is persuasive rather than conclusive. Meaning, the information that you get, you're trying to persuade the client to give you that information. Not because they are willing to give you that information anyway, but they'll just give it anyway because you want the information. Meaning, the information that you are getting is persuasive rather than conclusive. And because of that fact, you can't give 100% form of assurance. Now, think of some technicalities involved. Meaning, some of the subject matter could be technical. Meaning, if you're working on a technical subject matter, then it means you need to engage an expert in that respect. And by that part, there isn't any way you give 100% form of assurance, etc., etc., etc. Meaning, reasons why auditors do not give absolute assurance, number 1, because of use of selection testing. Number 2, inherent limitation of internal control system. Number 3, we are saying some of the areas, some of the evidence gathered is persuasive rather than conclusive. Number 4, of course, we are talking of technicalities involved when you're working on the subject matter, the technicalities that are involved there. Any question up to that point? Vincent, do you have any question?
No, mwalimu, I'm okay.
Good. Now let's go to the last bit of this part. Let's go to the last bit that probably I feel we need to discuss. Then of course we can call it a day. We can call it a day. This being our first class, of course, we can just have a bit of it. Then from there, of course, we'll do a recap of the SAT because I know the numbers would have increased. And they, of course, they will expect to hear what we discussed. So it's my prayer and belief that before we meet in our next class, you'll not have forgotten what we have just discussed, so that when we do a recap of the same, you will not be floating. Now, we have said assurance engagement is the process of examination of books of account. It is the examination of the subject matter. And we are examining this subject matter because we want to increase the degree of confidence of the intended users of the subject matter by give them reasonable assurance or limited assurance. Now, for you to start doing this assignment, of course, you have to consider what are some of the factors that I need to consider, meaning we need to understand issues of acceptance and continuance. Acceptance and continuance. Now, before accepting an assurance engagement or before continuing to onto this client you're dealing with, you have to consider what are some of the factors that I need to consider to all this organization, or maybe to continue onto that organization. And it's very important for me to consider issues of legal statutory matters. Number two, it's very important for us to consider professional matters. Three, it's very important for us to consider practical matters. Four, we also need to consider professional courtesy. You have to consider professional courtesy. Meaning, before accepting an engagement, or before you need to continue on this organization, consider what about legal statutory matters. Of course, I mentioned this. This again is coming in our topic 4. And the factors to consider before accepting an engagement. That is management of audit practice. Now, it's very important for you as an auditor to consider legal statutory matters. Meaning, I need to confirm before accepting this engagement, do I qualify to audit this organization? Because we are taught that if I've been disqualified from auditing a holding company or a subsidiary company, then I can't audit either. Meaning, if I used to audit the holding company and probably I was disqualified auditing that holding company, then I can't start auditing the subsidiary of the same holding company. That's not acceptable. Meaning, I have to consider, do I qualify to audit that organization? Number 2, it's very important for us to consider issues of legality, whether this company is legally registered, whether the company is legally registered. Number 3, you also need to consider the type of products that you'll be dealing with. Consider the industry where we'll be operating in before accepting an organization. It's very important for you to consider the internal control system, meaning under legal matters, consider regulatory framework. Meaning before accepting an engagement under legal statutory matter, consider what about the internal control system? Do I qualify to this organization? Is this company legally registered? What are the type of product that I'll be dealing with? What about the industry I'll be operating in? And of course, the laws and regulations that governs that institution in that industry. Number 2, professional matters. Before accepting this engagement, you need to consider the fundamental principles that is because, or to confirm, is there any possibility of threat to fundamental principles, that is something. Meaning, before accepting an engagement, you need to consider the professional behavior, you need to consider integrity, you need to consider competence and due care, you need to consider confidentiality, objectiveness of independence, and technical standard. Those are the fundamental principles. Ethical matters, professional behavior, integrity, competence and due care, confidentiality, objectivity, strong independence, and technical standard. Then you also need to consider, yes, these fundamental principles are very vital for us to consider, but it's possible we can have some threats. Now, what we are calling surfing. Before accepting engagement, confirm, will I be able to exercise my fundamental principles, or is there a possibility of threat to fundamental principles? That is surfing, that is self-interest, self-review, unfocused threat, familiarity, intimidation, or the management threat. So it's possible that, yes, I want to audit this client, but my relative is working there, meaning I have some self-interest. Or it's possible that, yes, they have told me to continue auditing them, and yet my relative has been employed by that company, meaning already I have some self-interest there. Or possibly I've invested in that organization, I have some shares there, more than 5% shareholding of that company. Or maybe I've been advanced some loan by the management of this organization, meaning I have some self-interest. It's possible I might have prepared their financial statement, or maybe I helped them to come up with proper internal control system, meaning when I'm coming in to audit, I'm coming to do a self-review. Meaning self-review, this is whereby you are re-evaluating your own subject matter. So I need to confirm, before accepting this engagement, is there a possibility there is element of self-review? Or maybe I'm still trying to defend my client during the court litigation with another third party, meaning I have element of advocacy threat. Or maybe I'm still trying to promote the shares of this company. When this company is a public listed company, meaning already I have some element of advocacy threat. Or maybe I'm continuing to own this organization and I've been on this organization for the longest time possible until I've become so sympathetic to an extent that I can't express an independent opinion, meaning there is element of familiarity. Or maybe because of that engagement with my client, there are some fees that they have not paid for the longest period of time, meaning they can be intimidating me. So I need to consider, before accepting this engagement, before I continue on to that organization, is there a possibility, maybe I might be intimidated either by actual or maybe by perceived threat? Is an issue that I need to consider. Or maybe is there a possibility that I'm making some decision on behalf of the management, means there is element of management threat. So under professional matters here, I'm going to confirm, will I be able to exercise my fundamental principles, or is there a possibility of any threat to fundamental principle that is likely to affect me if at all I accept this engagement or I continue auditing that organization? Then number next, of course, we have practical matters. Now, under practical matters here, this is whereby you are interested on resources. In practical matters, this is about resources. Resources in terms of the time to spend auditing this organization. Resources in terms of time. Resources in terms of number of staffs required, or any possibility of other affiliated parties. Meaning, before accepting an engagement, consider we have enough resources in terms of time. Maybe I have other clients that have the similar year end. And now this is another third client that have been engaged on it, which has the same similar year end. If I accept this engagement, will I be able to own this organization and still be in a position to express an opinion at the expected time is an issue that I need to consider. Number two, I also need to evaluate the number of staff that we have. Our ant farm is a small ant farm, and yet this is a multinational company probably. So I need to confirm they have several branches across the country. They have several maybe branches across the world. So I've confirmed if I accept this engagement, will I be able to cover this client given the number of on staffs that we have? Or should I consider doing a joint audit? Or maybe can I consider engaging maybe another person to all that organization by declining that engagement? Or I also need to confirm, is there a possibility of other affiliated parties? Meaning, if they have other affiliated parties, then there is element of maybe related party transaction and related party relationship, meaning it's an issue that I need to consider before accepting an engagement. Then finally, it's very important for me to consider professional courtesy. Now, when I'm considering professional courtesy, this is whereby I'm communicating, meaning professional courtesy. This is communication with previous auditor. Meaning it is very important for you as an auditor, before accepting an engagement, communicate the previous auditor. Now, when you communicate with the previous auditor, this person will help you to understand the billing arrangement. How much am I supposed to charge this client? Communication with previous auditor will help you to understand some of the potential risk areas. She will help you to get working papers. You get those working papers of this client. Of course, this will help you to understand the integrity of the client. Meaning it's very important for you as an auditor, before accepting an engagement, to communicate with the previous auditor. Why do you need to understand to do that? You help you to understand the billing arrangement, how much you are supposed to charge, some of the potential risk area, you'll be able to get working papers, and of course, you'll be able to understand the integrity of your client. And that's all about continuance and acceptance. And of course, there's what we call preconditions. Other than factors to consider, you also need to evaluate preconditions that you need to understand before accepting an engagement. What are the preconditions? These are policies, these are procedures. These are some of the things that we need to agree even before I start dealing with you. What will be your responsibility? What is my responsibility as an auditor? Is there a subject matter that I can work on? Now, do we agree that by the end of the day, I'm supposed to give you a report? Do you understand, other than understanding your responsibility, what are some of the criteria that must be there? And those criteria, are they reasonable or not? Meaning, other than factors to consider, it's also very important for you to consider the preconditions that you need to set before accepting an engagement. And Vincent, that's all about issues of assurance engagement. Now, what is remaining is now that part of non-assurance engagement. And I think that is good. It's a good start for us. I think that's a good start for us. I feel it's very important for us not to continue beyond there. At least for you to take some time, you conceptualize that, you try to understand that. And I'll be sharing those notes with you, probably before the next engagement. I'll be sharing that with you just to help you to start working on that. We'll stop there for today. Any question?
Thank you so much, Mwalimu.
Yes.
I want to thank you for the introduction. And I think going forward, I'm getting it right.
Yes, yes. Thank you so much, Vincent, for your commitment.
Yes.
At least you have demonstrated a positive gesture yes, you are alone and you stay put, because you know at least what is expected of you. We don't have time, and of course, we can't take any time for granted. We have to maximize every time that we have. And my prayer and request is that at least you just go through what we have discussed. I know you have just not your personal notes. Of course, I'll be sharing what I have so that you can supplement with what you have. So for today, we'll stop there. Looking forward to meet you in our next engagement. Thank you so much and have a lovely evening.
Good evening.
Thank you.